Hi there, welcome to this week market analysis. So as usual, what we're going to be doing is to go through some of this analysis over here and highlight to you the opportunities and what to take note of. So let's start off with the dollar index. So yesterday the CPI data actually released. It wasn't as low as what the market has anticipated. So likely what we're gonna see from a follow through here is that a little bit more upside on the dollar, which can indicate that potentially with CPI still not really falling as what the market has anticipated, maybe the Fed may not slow down the hiking process too aggressively, and that can build up a little bit of a positive sentiment for the dollar. So if you take a look at the technical point of view, right? This one here is doing pretty neat. This is a chart on the dollar index. So what we have right now, if you can see, is a very strong push, a very clear 1, 2, 3, nice little rejection around the area at 100% extension. CPI came out, we got a nice little rejection off. So if today we can get a follow through, ideally we're gonna see this as an impulse correction, more upside, with a target all the way back at its previous high around 105.60. And of course, this move to the upside is kind of considered as a short term, which means overall for the year, I'm still basically bearish on the dollar for a longer time frame perspective. Okay, but for now, we can still trade to the upside. And then of course, in terms of euro dollar over here, what we're seeing right now is that we have a probably 1, 2, 3, and then yesterday development is an expanding flat, potentially completed the wave 4. Short term wise, we're expecting a little bit more downside towards this area to complete that 5-wave structure, and then from there perhaps we might get a bigger corrective structure. I did not manage to kind of capitalize and traded this because back then there's just quite a bit of possibility of how the pattern can turn out. So I didn't write on this, but of course, if today you're looking at it from a short-term perspective, if this still makes sense to you in terms of the potential reward to the downside, potentially towards 1.0630 and 1.0580, then you can look out for a sell trade setup to the downside. Okay, pound dollar, very neat. Okay, came up, tagged exactly around that area, and then we got a rejection. Okay, so overall in terms of pound dollar, we're still seeing this as a regular flat development potentially, and internally we have this as a 3-wave corrective structure, you can see. So right now, if you have any sell trade, very nicely at that tag level, we'll continue to expect more downside with a target at 1.1840, which is that previous low, and you just simply have to manage that trade. Okay, ideally we want to see this momentum follow through a little bit of a correction and then just keep going down. So very nice. Once it tags around 1.1840, we'll be cautious because potentially that can be a double bottom, and if it completed the overall regular flat, then we can look for more upside from there on. Okay, but for now, definitely more on the downside, so you can keep an eye on it. Aussie dollar, quite similar to the pound, very nice little structure over here as well. Initially we shorted here, it came down, we shift stops to protect a little bit of a profits, we got tagged out with trailing stops, and then the market came up, tag it again. Okay, so this one here, if you put in a little bit of fibs, we do have that. Okay, but of course I'm using personally the extension. We didn't really come that level, but kind of pretty close. Okay, about 10 pips or so. So if you manage, right, I didn't manage to tag myself in on this trade, but I got in at this, take a little bit of profits. If you manage to kind of capitalize on this area here, similar to euro dollar perhaps, then simply just manage your trade. Okay, shift stops to break even, and ideally we're going to see this fall lower. Now in the event that you did not manage to catch it, I don't think now you want to just jump in like that. But what you can wait for is perhaps a break, a little bit of a pullback. That would be your second opportunity to sell it lower. Okay, so I think right now, since actually last week, okay, most of this structure here has been developing very clearly. Definitely good opportunities for you to not only capitalize from the market, but I think more importantly is to actually identify these structures good case studies for you to actually understand and kind of learn out these patterns, so that in the future when you see something similar, you know how to engage them. Okay. Dollar Canadian is essentially still in the consolidation phase, and from an Elliott Wave perspective, this is not something we want to be in, and therefore my suggestion over here is just simply remain neutral, stay off the market, wait until a clear structure has developed, then only we jump in. Okay, so dollar CAD, not much to really pay attention to and talk about. Now next up we have the dollar yen. Now dollar yen is a little bit tricky, a little bit more, complex. You probably need a bit more experience to kind of decipher what's happening, but for me right now, what I've done over here is to have a primary forecast as a extended third wave. Okay, so there are many ways you can look up for it. I think some of you might be able to see it as maybe this is turning into a channel, right? So it's still looking pretty corrective in its way. That's one possibility. Okay, that in fact is my second forecast, which means that if you get a rejection down here very sharply, we might need to rotate to this scenario where you can expect more downside. But the main reason why I'm looking at this count here instead is from yesterday's CPI. We kind of see a little bit of a dollar strength. Fundamental data seems to suggest that short-term momentum can continue to the upside, and for that reason, I'm a little bit more tilted towards dollar strength, and therefore my main count right now would be this. Okay, and of course I couldn't put this as a 1 2 and then of course 3 here, okay, because then that will violate the entire count unless this is going to turn out into a leading diagonal, which we don't usually do that at the very start. So right now the count that I'm seeing here is potentially this is a bigger 1 2, but this here as it's developing is a internal 5-wave structure, right? So 1 2 3, as you can see, then a little bit of a 4 and 5, and then that will complete the bigger third wave, and then from there on 4 and 5. So we have a lot of upside. Okay, so this is not a buy immediately, but if we can get a decent pullback here, then of course we can look to capitalize this up move. Okay, to kind of ride on the smaller degree third wave and potentially even hold on to that position all the way until the bigger degree completes itself. So keep an eye on it. I think giving it maybe a couple more days, by the end of this week, early next week, we might get an opportunity to get involved in the dollar yen. Okay, and when this indeed starts moving, just to show you on a higher time frame perspective, the upside can be really attractive here. Okay, so what can happen is over here, maybe a bigger A, a bigger B, a bigger C, right? So if you can ride this entire move, obviously this would give you an opportunity to reset and enter again. That will be great. Okay, so that's the bigger time frame perspective. Let's see how the market develops from here. Okay, gold. Okay, yesterday we saw some of these major pairs move nicely, but gold didn't really drop. Okay, so right now, if you look at the RSI, we do have a very obvious divergence between 3 and 5. So my primary forecast here is that this may be a 5-wave down, potentially completed, and of course after a 5-wave structure, we then expect a decent simple 3-wave pullback, potentially back towards the start of end of wave 4, and then the down move. So for now, be a little bit patient, wait for this to develop. It's definitely not a good idea to be kind of like selling at the low here, right? Because then your risk reward is just not going to be good. Okay, so gold here, suggestion is just simply be patient. Maybe this might drop a little bit more, but as long as again this goes down slow, something like that, you don't want to be selling it. The chance of it continue just to fall like that is not very high. Okay, so we just be patient. Crude oil. Hey, crude oil over here, I think we can start to look up for the potential structure that looks something like that. So we have what we call a double tree. Okay, so internally you can see here as a 1 2 3, ABC, and then that forms a bigger W, right? This is your reset move, and then over here we're anticipating another ABC, and then that completes the bigger Y. Okay, so that's what we call a double tree, right? Two sets of tree. So that's the primary view on crude oil. Okay, so if over here we can continue to get a good decent corrective structure towards the 50 and 618 Fips, we might get a decent buy, potentially back up towards the top of the channel, and of course we have that confluence at 8420. Okay, so commodity side of things, maybe you want to look at oil instead of gold in the short run. Okay, yeah. Now S&P right now, okay, we kind of initially saw that this is a very clear tree wave. We get a decent bounce, but yesterday the market came down pretty sharp. So right now we're gonna update our forecast a little bit and anticipate a bigger tree wave structure somewhere around here. Then we look for another buy opportunity. Now for me, as long as the market is able to kind of support, okay, above this little trend line here, generally we are bullish, okay, because that trend line itself is a daily trend line that has been broken. So the sentiment is definitely quite bullish as long as it's able to maintain above it, and therefore any pullback in the corrective structure may be a decent buy trade opportunity, right? So that's where we look out for that level around 4030. Okay, lastly over here to cover is Bitcoin. So Bitcoin here we can see that yesterday we did get a little bit of a pulse up, but for me, it's common. Again, nothing drops in one direction all the time. So if we are still looking at it from an overall perspective, right now this can still come back down, and our target remains around 2465, right? As long as this level holds, we're generally bearish. Okay, but of course we managed to get involved in a trade up there, so right now it's definitely a risk-free one for us. Good. So that's all for me in today's video over here. All the best to your trading, and I'll see you guys in the next one.